Good afternoon, everyone, and welcome to Stock Market Today. It's Ali Coram and Justin Nielsen here with a breakdown of the action in today's session, Monday, October 21st, where we saw the NASDAQ as a lone index up today as Nvidia had a nice session, Justin.
Yeah, it was definitely. I mean, if you took that one out, it might have been a very different look for the index. But we'll talk about that Nvidia a little bit, as well as a few other stocks that we're looking interesting, including CBOE, Sweetgreen, and Palo Alto Networks.
Okay, we will take a look at those stocks, but first, let's take a closer look at the major indexes. The Nasdaq today up almost 0.3% and a little upside reversal there. The S&P 500 was down on the day by about 0.2%. Not a lot of damage there. Let's go to the Dow, down 0.8%, still holding above short-term support levels. Small caps, though, a little bit of a different story here. The Russell 2000 hit a bit harder today, down 1.6% or so by the close, coming down to its 10-day moving average. But Justin, let's start with the positive, the
Yeah,
NASDAQ here.
and the Nasdaq, it wasn't positive for a lot of the day, but at the end, it really kind of pushed higher, ending with that 0.27% gain. A real strong close. Now, keep in mind on the weekly chart, something we were talking about on IBD Live this morning was we've had 6 weeks up in a row, consecutive weeks up in a row for the Nasdaq and the S&P 500. We're going into the 7th week, and look, it's okay for it to pause here a little bit. And just as a reminder, for last week on the daily chart, the NASDAQ did have a distribution day earlier in the week. It did have a stalling day, and it kind of set up this little short-term resistance. And so we're right there at the top of that short-term resistance that we kind of set up from Monday of last week's high. And, we'll just see if we kind of doodle around here for a little bit. That would be very normal. We're kind of at this previous level. And again, you can see this not only on the intraday chart, this level around 18,000, 570 or 60, 50, what have you. But if you go back to the daily chart, you can also kind of see that this is we're kind of coming up to this prior high level. So slowing down a little bit right beforehand is very normal action. What we hope to see happen is after that little slowdown, a real strong pop through, which should break through not only the short-term resistance, but this 18,671 high from July as well. That would be the ideal situation.
Yeah, we'll see what happens there. Let's go to the S&P 500, Justin, a mild down day here. The overall uptrend still very much intact. And as you said, if we take a little break, pause, pull back, we've got plenty of room down to that 21-day line.
Yeah, absolutely. And the S&P 500, nothing looking wrong here. This has already gotten into new high territory. It did it before the Nasdaq did. It has been a little bit stronger. The Nasdaq has been a little bit weaker. But this is also kind of just getting this little blip of short-term resistance from Monday's high. Kind of got up there Thursday, got turned away again, but really not looking damaged at all. I mean, this is, right here at highs. It's barely, testing the 10-day moving average line. Both indexes really kind of putting a lot of trending action above their 21-day moving average lines. That's exactly what you want to see. Although I will note that, as we noted at the top of the show, Nvidia was a big, strong performer, kind of skewing these indexes a little bit because of how heavily weighted it is. But if you looked at the QQ, the Qs up 0.2% versus QQEW, which
Right.
was down, it did show a little bit of a different story. And even worse on the RSP, I think that was down like 0.9%. It kind of came up off its lows to close at like 0.8%. Down, but certainly a different picture here when you kind of take out some of those heavyweights that were like Nvidia that were actually showing very strong action today.
Justin, let's also talk about small caps and mid caps. So here's IWM, which represents the Russell 2000, down about 1.6% on the day. Mid caps down about 1.2% today. What was driving that? It seems like perhaps the treasury yields. may have had something to do with it.
Yeah, you have to, as the first culprit, I always look to the 10-year Treasury yield to kind of say, okay, is this what was potentially driving some negative action on those indexes? Now, one of the things was there was a little bit of a disconnect. We got used to, oh, the 10-year Treasury yield going up and the Russell 2000 and mid caps going up as
Mhm.
well. It just didn't seem to bother it that much. But at a certain point, this does have an influence, right? The smaller cap companies and mid cap companies are a little bit more reliant on debt. And when you start increasing the costs of those debt with a higher interest rate, that is going to kind of trickle down there. So that's one of the effects that you can see here. And look, I'll be honest with you, mid caps and small caps this year have been hard. They have been
Choppy.
giving you the Lucy and football touch pretty much the entire year, where every time you think they're about to go, they kind of pull in. So this doesn't necessarily mean that this is done, that this trade is not happening, but we have certainly saw a lot of times in the past year here where the Russell and mid caps seem like they're about ready, and then just at the last minute, Lucy pulls that
Yeah.
football.
Here's the silver lining, though, at least in terms of just like the overall backdrop for the market. At least we're chopping higher.
Yeah,
We're not chopping lower.
yeah.
So we'll take it.
Right,
We'll
yeah.
take the chop higher. You just kind of have to know the personality of this. It is a little loosey goosey, as you were mentioning.
Yeah, so, yeah, way to put the glass half full there. Good job.
There you go. Okay, let's take a look at some sector ETFs. Here's XLRE. So, getting hit hard today here as well, down about 2.1%.
Yeah, and this kinda comes back to that 10-year treasury yield that
Mhm.
you mentioned, Allie. Look, when you've got, a higher yield, the yield kinda getting back above 4% and seeming to get comfortable there, some of your real estate areas are gonna have a little bit of a harder hit. So, this got hit, and also XHB, the home builders. This has been an area that was looking like it was, again, even though the 10-year treasury yield was coming up, it seemed like this was kind of bucking that, normal correlation, or inverse correlation, I guess I should say. But it kind of did suffer today. It did cross below its 21-day moving average line. So again, as you see that upward pressure on the 10-year treasury yield, you're maybe going to have a little bit more of a sluggish action here in the home builders, or potentially down as well. Maybe another test that 50-day moving average line.
Let's also check out XLF, down 0.8% to start off the week, but after a nice move here for financials as of late, Justin.
Yeah, it's hard to fault the financials for taking a little bit of a break here. This has been a strong breakout, and it's really holding up very well. So, not too concerned in this area, and we are going to talk about some financial stocks today. But we have some of the earnings that have really kind of thrust the financials a little bit into the limelight. I mean, we already had J.P. Morgan and some of the banks coming out. They do tend to start the earnings season, and those have been going well so far. So financials still looking strong, even though it had a down day today. Not too concerning in my book.
Great. Okay, let's take a look at IBIT. We've been looking at crypto lately, down 1.3% on the day, but off lows. And this is another area that had a strong move lately. So, not surprising to see a little bit of a break here.
And it seemed like it got support right where it came down to on Thursday. So again, that's where I would have liked to see it get short-term support. It could have come in a little bit more, and that wouldn't have bothered me. But if you kind of go a little bit more to the left, you're right there. You're with me. It's at that 37.94. We're getting that support. So
Yeah.
I like the fact that it got support right there. And yeah, even though it was down more than 1%, the fact that it was off its lows, I mean, it was down more than 2% earlier in the day. So I don't think that the risk on appetite is squashed at this point. We still have a
Mhm.
lot of risk on appetite.
Yeah. And then, of course, gold mining, silver in focus as of late as well. Here's a look at GDX off highs on the day, up about 0.2%, but an incredible week last week. I would say for GDX, one of
Yeah.
its better weeks in a while, it looks like, up about 7.7% on the week. It did have a 10% move. This is another chop higher area, maybe for swing traders or something, Justin, here, but it has been moving higher this year and showing outperformance.
Yeah, and the story behind gold. I mean, this is if you look at GLD, excuse me, that has been even stronger than the miners in a lot of ways. In fact, it's actually one of those situations where you don't normally think of gold as being a strong performer in a strong market. I mean, and the S&P 500 has been very strong, and this is actually, kept right up there with it, for the year, even with the S&P 500 up over 20% for the year. So really impressive move on gold. And again, whether you're playing some of the miners themselves or silver, which has also been very strong lately, that
Yeah,
had a
joining the
nice pop
party.
on Friday, and a breakout, and really kind of held the gains from last week.
hmm Let's take a look at today's IBD stock of the day, CBOE, if I can type
There you
that
go.
correctly there. Up 1.6% on the day, Justin is working on the right side of a base. So walk us through this setup.
Well, first of all, let's go ahead and take a look at the weekly chart to kind of get our
Mhm.
bearings. This isn't a stock that tends to move very much, but you can see, early in 2023, this did have a decent move. I mean, up from like 120 to 180 in 2023, and then it has been kind of basing. But look at how tight these bases have been. You had a flat base that was 8%, then a deeper base that was 17%, followed by this most recent flat base. Again, a very shallow at 7%. So very tight action here. It really just kind of let that 10-week moving average line catch up to it. Very strong action in that regard. You see the EPS rating of 92. There's two components here. The most recent activity and the long term. So on the long term side, you've got an EPS growth rate of 12%. Not spectacular, but that earning stability. And you can really see that in the line where this is a very stable earnings mover. One of the things that the stock of the day mentioned in the article today, so I highly recommend people taking a look at that. You just, if you're in Market Surge, it's right there at the top. You can kind of take a look at that. One of the things it says is, okay, with the election, there might be more volatility. And we have been talking about volatility kind of increasing on the VIX. It did get above 20 for a little bit. So with that increased volatility, you do see some benefits happen with the exchanges. So CBOE is one of them. I mean, you could also look at ICE as another one that has already kind of broken out. So these are the areas that do tend to do a little bit better with extra volatility. So if you're thinking that, hey, this volatility is kind of tough to handle, this is a way that you can kind of participate with a little bit of a slower move and participate on the upside with that extra volatility.
Great. And yeah, so looking at in terms of the buy point here, there's a pretty clear trend line, Justin,
Mhm.
across the highs of this base. So you don't necessarily need to wait for a breakout of this flat base to enter, arguably an early entry here today. One other thing to point out though is
Yeah.
because this is historically a slower mover, we've got 11 calendar days until the earnings report. So in terms of the kind of cushion that you need, that's just something to consider, but also knowing the personality of the stock too. How historically does it react to earnings? So those are some things to weigh.
Yeah. The last one was pretty strong. And so one of the things, and I think you and I did a video on this previously, one of the things we do sometimes is we will look at the options market and kind of get a sense, okay, what is the options market with the implied volatility? What is that telling you in terms of the expected move? And once you kind of have an idea of what the expected move is, you can kind of judge, do I have enough cushion to be comfortably holding this through earnings?
Right. Well said. Okay, next on our list, let's take a look at Sweetgreen. Move over Kava, perhaps. It's bouncing off of its 50-day line, up 4.5% today. Sweetgreen, ticker SG. Now, this base that it recently formed, the depth of 29%, Justin, that is looking more orderly than the previous base with a depth of 38%. But it hasn't been easy to hold the stock.
Mm.
Perhaps a bounce off of the 50-day, a little bit easier in terms of the entry point here to manage risk versus a breakout.
Yeah, it certainly does help sometimes, especially when you see kind of like a reversal like you see today. It does kind of put a line in the sand, and okay, look, if it crosses below this line, then it's not doing what I thought it would. If it continues from here, you can kind of be, rest assured that okay, yes, it's kind of going in the way that I thought. You're really going to be looking for that follow up activity. Now, as you mentioned, Kava and Sweetgreen are both a little bit on the higher side if you're looking at the ATR, the average true range, which is a measure of how much does this stock move on a daily basis. And Sweetgreen is up there. This, move of 4.5% for the day
Yeah, it doesn't.
isn't unusual. It's you can find a lot of days that have this type of move or more. So you have to be thinking to yourself, is this something that I can handle? And Sweetgreen has been a little bit of a harder one to handle. It's had a lot of these times where it's looked like, oh, it's ready to go, and then it kind of pulls back. And you just have to know, before you go into it, what that risk profile looks like. Are you able to kind of handle that extra volatility that Sweetgreen has? It tends to have because it can be a little bit easier to shake you out. But the one thing that I do like, again, is that you've got a line in the sand with some potential, asymmetric reward to risk here. You have a potential for a much larger reward here. If you can see this going up above 40 or even higher, whereas you're only risking a few points at this point. 1.6, 1.6 points to the 50-day moving average line. That's not very much.
Right. Okay, and let's also take a look at a cybersecurity leader, Palo Alto. Cybersecurity stocks were on the move today. Here's one ETF, Bug, slightly higher, but it looks like Palo Alto performed a bit better here today, up nearly 1% to break out of a long consolidation that goes back a number of months here, Justin.
Yeah, and look, we've talked about how on the cybersecurity side, a lot of times these guys trade leadership. For a while there, it was Palo Alto as the clear leader. Fortinet has taken its turn. CrowdStrike was certainly the one that we were focusing on until the blue screen, took over the world, and CrowdStrike has been, kind of suffering since then. But Palo Alto certainly seems like it's been recovering a little bit better than a lot of the other members of this group. And as you mentioned, it kind of got up to this prior area of resistance. It hasn't quite broken through there yet. So if you want to wait and kind of get a little bit more evidence, I think that's okay. But it's certainly, after that strong week 2 weeks ago, and the fact that it held all of those gains, it was just unwilling to give up any of that. I think the move today, I think, is very promising. Certainly worth taking a deeper look at this one.
Yeah, I mean, I think you'd probably agree, Justin. The ideal entry, in
Yeah.
hindsight, I believe we were talking about it on IBD Live, though, was when it started bouncing off of the 50-day line, clearing this trend line, had a strong close on the day. I think even let's see what the volume was like. It did poke above average.
Hmm.
So, and the relative strength line, of course, was moving along with it. So I prefer entries like that, but at least here around those highs, it did tighten up for a number of sessions, and recent relative strength definitely notable here.
Yeah. And even better, if you do get those early entries, what today's action kind of sets up for you is a potential add on. So
Right.
you can start with, by getting that lower average cost to start, it kind of gives you a little bit more flexibility to make it a larger position when you get these extra opportunities after some pauses. You don't necessarily have to wait for the full 3 weeks tight. You can say, oh, look, I got a little bit of a pause, a little bit of an entry, a little cheat here to get in and get some extra shares. So as long as you're kind of keeping those shares smaller on the way up, you won't drive your average cost up that much. And you can really kind of keep that cushion, which again, with an earning season right, that we're right in the thick of, that can kind of help by having that extra cushion. It does give you some flexibility to work with your stocks.
Right. And bonus ticker, this really should have been in the market section, but you did mention Nvidia, Justin. And so notable action here today, worth highlighting. A number of us on the team do own this, including myself. But interesting to see it really standing out in today's session. As you know, we looked at QQEW and RSP. This was clearly boosting the NASDAQ here today, up 4.1%, officially breaking out into new highs. And I believe also officially with a market cap number, pretty interesting. What was it? Is it
The
another
three
milestone?
the
Another
3 trillion
milestone.
mark, I think is where we're at.
3.5 trillion
Yeah,
for the
so,
first
yeah,
time.
it's like, okay, well, watch out, 4 trillion, here we come. Remember when 1 trillion was a big deal?
Right.
And again, kind of getting back to full circle, what we were talking about at the beginning is that with a 4% move, 4% plus move on Nvidia, and it being such a heavy weight because of that large market cap, it does have a very strong influence on the indexes. And so that's where, taking a look at the equal weighted indexes kind of takes some of that out. So you're still looking, I mean, for the QQEW, you're still looking at the top 100 stocks on the NASDAQ, non-financial, I might add. But,
Mhm.
it does kind of let you know, okay, that when you look at everything, because for example, just looking at the sector spider ETFs, there's 11 of them. XLK, which Nvidia is the largest member of, XLK was the only sector that was positive today. Everything else was down. So it just kind of gives you a little bit more of a sense of the breadth behind the move. And so Nvidia is definitely one to watch in that regard, and especially since it's such a heavy component, XLK, which
Right.
again was the only
Mhm.
up sector of those 11.
Mhm. And what I would argue, it is also interesting to point out, there were a number of investors, traders out there who speculated that, maybe Nvidia isn't going to be the leader anymore. It
Mhm.
did take a lot of time off. I think today shows that it still knows how to lead, Justin.
Yep, and the words of Monty Python, "I'm not dead yet." And I should have mentioned also that I do have a position in NVIDIA myself, and I think, for a lot of us, we were getting in earlier. So
Yep.
again, this could be an opportunity to add to shares.
All right. Well, thank you, Justin. And thanks everyone for tuning in. That is it from us for today. But we will be back with more tomorrow morning on IBD Live, investors.com/IBD Live for all the details there. We will see you then. And then we'll also see you right back here tomorrow after the close.